What's good, everybody? Welcome back to the Millennial Bridge. I'm your host, Is-Rael. Now, in this video and in future videos, we're going to be starting a series based on tips and tricks that I didn't cover in the course. Now, what are these tips I'm going to be teaching? These tips are going to be on a wide variety of subjects, but all in all, it's going to improve your stock trading. Now, for this very first video of the series, the tip I'm going to be covering is always making sure you double check your order before you submit it, as well as going over what a stock halt is in the market. So let's get into it. Alright guys, so I recorded my trade this morning and the results of it you may have seen on Instagram when I posted, but we're just going to go over it right now, all the things I did right and all the things I did wrong according to the course, and as well as a few extra pointers, tips and tricks here and there. As you can see, the market hasn't opened up yet. It's 6:29 and I have my watch list all set up right here. I'm just going to fast forward to when the market opens up. Something to note is that I already have an order set before the market opens up. I don't advise you do this, but for this particular stock, as you can see, it's at $1.82 at the previous close of yesterday. And at pre-market hours, it was already at $4. Now, I had a hunch, I was taking a risk, I was thinking, hey, it may continue to spring upwards. So as you can see right here, I decided to place my limit buy order at $4.20, expecting it to go all the way up to this resistance level up here at $4.45. And hey, worst case scenario, it stops me out at $4 and I lose about maybe 20 bucks right there. It's okay. I thought it was well worth the risk given the $2 just about had increased from the previous day. So that's why I have an order before the market has opened up. Okay, and the market's going to open up. And immediately I'm in the market and then it stops me out. So as soon as the market opened up, my trade didn't turn out the way I expected it to. And luckily I had a stop loss because, as you can see, it's falling below $4 and still in counting. And now I'm going to show you how much money I lost. See, it was $1.50, not quite $20, but you get the point. I thought it was worth the risk, and so I took it. If you're going to take a risk, again, always have a stop loss. Let's fast forward to when I make my second trade in the market. We can see right here it was showing a little bit of strong green candlesticks, and this is when I decided to place my second order of the day. Now, you can see I'm about to place an order, and can you spot something I did incorrectly? Exactly. I didn't put a take profit level, and I didn't put a stop loss level. And that's how you lose money. That's how you take risk without management. So if I would have decided to place a 2-to-1 profit loss ratio, let's say I was shooting for 10 cents, so put a take profit level at $4.13, then all I would have had to do is place a stop loss at $3.95, give or take. And that would have prevented me from losing out as much as you're going to see right now. So I buy into the trade. I'm like, okay, it's going to go up. I'm seeing strong green candlesticks. See down here? We'll see about that. Actually, I remember this trade. Okay, so the trade started going good on the upside. As you can see, profit's already building right here. And here's a tip. You're going to watch and see the results of me not following my own advice, but it spikes all the way up to 30 cents, and I should have just closed the trade right then and there. That's 10 bucks and just walk away. But instead, push my luck, put an order at $4.45, expecting it to continue, and it didn't quite do that, as you're going to see right now. So my advice to you, remember again, we only expect stocks to rise about 10 cents. If it rises more than 10 cents, good for you. You made extra profit, but place that limit order 10 cents, 15 cents, and keep moving it up as you see fit. If I would have decided just to take profit early, I could have avoided this loss. And again, huge mistake. I have a take profit level. I have a buy-in order. I'm already in the market, but I have no stop loss. And this is a huge problem when you're trading. You need to always have a stop loss. I'll keep emphasizing it because I don't take my own advice. I hope you guys do. But this is evidence of me not taking my own advice. So it was just sitting there for the longest time. You can see right there. And when a stock just sits at a number and doesn't move, that should be an indication to you that, hey, it may have a reversal to the downside. I should have spotted the falling numbers and immediately pulled out my account or whatever I had in there. And it's just gonna until I decide to take myself out instead of putting a stop loss. As you can see, I have my hand over the close position. That is another tactic you can do. You can click on the close position there and a screen will pop up and say, are you sure you want to close the position? You can leave that message on the screen as you're preparing to close the trade, but keep in mind that does not count as a stop loss. You still need to set a stop loss first, and then you can do that second tactic of leaving up the close order on your screen. That way you can close out of the position early just in case. So continuing on, as you can see, I just entered my third trade. I saw it bottomed out. I was expecting it, okay, it's going to bounce off this support level down here that I had marked off. It didn't quite continue to fall past it, so I expected it to continue upwards. And again, I should have set a stop loss, but I did not. I don't know why. I don't know what I was thinking this morning. Just take a ton of risk. And right there, I closed the position because I was not prepared to incur this loss if it would have continued falling. So you can see my 3 trades of the morning so far right here. It was a $1.50 loss. I took that gamble before the market even opened up. So you should be aware when you're trading pre-market hours that, hey, just because the stock's shooting upwards in pre-market doesn't guarantee a gain of capital. So that one's on me. Now this second one right here, this $30 loss, if I would have decided to put a stop loss and follow my rules of the 2-to-1 profit loss ratio, I could have probably cut this loss down to about $10 maybe. Just being aware of the small details that lead to you losing a lot of money, such as not setting a stop loss, these can really make or break your account. So again, a $10 loss compared to a $30 loss, huge difference. And then my trade you just saw right now, the $8 loss, and that was me afraid that it was going to continue downwards. On this last one, 2 things. I should have set a stop loss, number 1. And number 2, sometimes you have to wait for the trade to work out. And I'm not saying you sit there with an open position, so that means you're already in the market, you're just sitting there, the stock's not moving, and it looks like it's going down. You have no clear confirmation if it's going to go upwards, but you have a feeling or you believe based on your indicators that, hey, it may be oversold, so it's probably going to go back upwards. So basically, if a stock's not moving and it looks oversold and it looks like a good spot to get into the market and you're in it and you're just sitting there now, what you can do is you can place your stop loss down a little bit more, still place a stop loss, but just move it down a little bit more than a 2-to-1 profit loss ratio. So, hey, okay, instead of you losing $10, pretend with me on this trade, let's say you move your stop loss down even more. So now the most you're risking instead of $10 is $15. So you just taking that extra $5 risk, what could have happened is it may have fell down 1 more cents, 2 more cents, and then pop back up. The reason you move down a stop loss is so you don't get stopped out of the market right before the stock does a reversal. So just a tip, let's continue along and see what happens. Alright, and right there's our first green candlestick of the 1 minute chart that just occurred. So we have some buyers in the market, and if I would have stayed in the market, I wouldn't have lost those $8, and it looks like it's on the upside going upwards. So I have my finger on the buy button already and set, because once I get that first confirmation of above that first resistance level right there, remember, up and to the left over that candlestick right next to the green candlestick, that red one, once it crosses that, that could be a buying point for me, as I'm expecting it to go to the next resistance level, which is at this one right here. And it may not look like a lot, but hey, 10 cent, 5 cent, 15 cent moves, they can produce profit on a 50 share budget. So this is a good tactic for you guys. When you're in the market and you're waiting for it to cross over your resistance levels, I bought in right there because I saw it had just crossed over it. I would sit in the to buy order window screen, and I would just keep your hand on your order. Make sure you have these checked off. Don't follow my exact instructions right here, as I didn't put a take profit or stop loss level, but open up the window screen, get your finger on the order sent button, and wait for it to reach the levels you want to. Your goal is to get in and out of the market as quick as possible. So as we can see, the stock is rising right here. And I bought in. If you want to figure out what you bought in at, you can move your cursor. You can click on this right here or move your cursor to the top, and it should say 385. And I'm quickly rushing to put my take profit and stop loss levels. I have stop loss at 370, which is down here, and a take profit at 458. I'm changing it to this resistance level right here in anticipation, and then I set the order. And then what you can do is you can click on the order, you can click to close the position, and you can just wait, and you can just sit in this window screen and wait for an opportunity. That way, hey, if it reaches somewhere near this and you want to take profit early, bang, you can hit close and the order's sent off and your position should close immediately. On the flip side, if you have profit and it's spiraling downwards and you want to save $1, $2, or even break even just before it passes your buy-in level and starts heading down towards your stop loss level, you can just close the position early. That way you protect your position from more damage. So as you can see, it's rising on upwards towards 420. At this point, I had no idea if it was going to get there or not. I was really debating if I should close the position or see if it was going to hit that 20 mark. But given the rally ahead this morning, I expected it to, and not only that, but it decided to just continue on upwards, and I couldn't quite capture all that profit, but I was prepared to capture the next profit on my fifth trade, which is going to be right past this resistance level. And so you can see I'm in the market, and it's really fast paced, this stock market, so you got to be in and out of your trades and back in the next one within seconds. So we're in the next order. I bought in at 471 it looks like, and now it's at $5 on its way upwards. Just broke the next level and I hit my order to cancel. So every level it touches you should be selling out at, or you can maintain more risk. So each level a stock passes, you should be expecting to either buy in or sell out, as those are typically when stock reversals happen, and at the same time those are spots where stocks break out from. So you got to play with it. You got to look at your candlesticks right down here. You got to look at your volume bars, your boiling bands, your RSI, all your indicators. Right there on that fifth trade you saw me take, I closed the position early because I didn't expect it to continue past that last resistance level right here, this third bar. And so I pull up my account history, and you can see for the day I took 5 trades so far. I've just about broken even. I've just about made it back to even dollars, and we'll see if I make it there. Surprise, I don't. I definitely do not make it there. You're probably wondering why. Why don't you make it there? You're so close. So at this point, the stock had jumped up roughly $1 within 5 to 10 minutes of the market being open. So when stocks move rapidly in a small amount of time, meaning a stock jumps up a whole $1 in a minute or something crazy like that, I believe it's a stock moving $1 within 5 minutes. Point being, you may get a stock that gets halted. And what do I mean by this? What does the word halted mean? It basically means the market has halted trading on this current stock, OCX. So nobody can trade it after the stock's been halted, and it usually gets halted after a giant move like this. The stock will be unhalted after about 5 minutes, and after those 5 minutes you can continue to trade the stock. You can see if it continues to rise upwards or falls after that halting period, but just keep in mind that if a stock is rapidly increasing and it's only been about 3 minutes, expect it to get halted. And if I were you, I would get out of the trade before it gets halted, because a halted stock means you can't sell out of the position if you're already in it. And the flip side to that is when it gets unhalted, it could have a massive spike downwards. You should definitely set a stop loss if you do hold a position on a halted stock. If not, great, you got out of the market in time, perfect. So let's go back to my screen, and the stock's halted for the next X amount of minutes, so we're going to skip ahead until it gets unhalted. Right before we skip ahead, one thing I'm going to cover is that I've never seen a stock get halted before, and I wanted to take a little test in the market and just see, hey, what if I tried something here? I decided to place an order while the stock was halted, and I'll go over the details once we fast forward, but just a little heads up. Okay guys, this is the order I was placing. So we're at $5.24, and I just placed it right there. I expected the stock to continue to rise to $5.75. I was like, hey, it's spiking upwards, like there's no way it's going to fall back down. I mean, a halt's only a good thing, right? Completely and dead wrong. At least on this one, I placed a stop loss, because if I didn't, oh man, who knows the amount of money I would have lost. On this one, I did set up a 2-to-1 profit loss ratio, but as you can see when I fast forward, things aren't going to work out quite how I imagine them to. So watch right here, OCX, watch this, because I believe I'm looking at other stocks while I have that order set. And you can just see it's at $5.24, and just see if it rapidly declines right now, because I believe I wasn't looking at the chart. The order was already sent out, and then all of a sudden I start getting messages on my screen that my order's been executed and that it took me out of the market. So I'm just backing it up real quick so you guys can see my order, and you can see the messages that occurred after my order. Now, honestly, I have no idea what happened with the simulator and why my stop loss stopped me out at $3, but you'll see right now the messages and you'll understand what I'm saying in a minute. But as you can see right here, my stop loss is at $5.45, and the stock has been halted for about 3 minutes now. So be advised when you place an order after a stock's been halted, because this may result. Bang. Okay, so stock's moving, and do you see the orders that just came up? Bought 50 stock at $5.50. Cool, I'm in the market. Sell order at $5.75. Stop loss at $5.42. My buy order got executed. My orders got placed. My sell order or my take profit order at $5.75 did not go through. It got canceled. So this can occur, apparently, when a stock gets halted, and just in general. Make sure your orders go through and you don't get this error message of order canceled. Continuing, the last message I got was my order got executed, sold 50 shares at $3.06, and it has a parentheses of stop loss, as if I set my stop loss at that level. Now, $3.06, that is all the way down here. The stock didn't even touch that price this morning, so I just gave up tons of money for free. So be advised, be aware, this can happen, and it's better it happen in a simulator account rather than a live account, and this is why you should use the simulator before you get into the actual market. So things like this don't happen to you, and that way you can play around with all these different tools. And hey, what happens if I do this? Is it gonna screw me over, or am I gonna make money from it? And I got screwed over hard on this one. Oh, that explains it. I was a little confused earlier this morning why I had lost over, you're gonna see right now, $100 and X off of one trade when I swore I put a stop loss. There it is, $122 loss. So at that point, I was just really discouraged and confused and angry with the simulator, even though it's not real money. It's okay, it's experience, and that's what I was mad about. At this point, I should have put myself in trader rehab, stop taking trades, like, hey, I'm done for the day. I lost so much of my account, I blew it up. And there is such a thing as over trading. Typically, you don't want to trade more than 5 times a day. So that's 5 positions on 5 different stocks, same stocks, whatever. You don't really normally want to take more than 5 trades a day. But I was determined to make back that money. That is a terrible mentality to have in the stock market, is trying to win back money. And I was just writing a note because I was confused and I had to take note of that one. I had never seen a stock halted, and I wanted to see what happens if you place an order, a correct order, during a stock halt. Never again. We'll wait till the stock moves before we commit. So at this point, I'm getting my next trade set up. I'm keeping an eye, seeing if it's going to pass this support level, seeing if it's going to pass this resistance level. Have my buy order all set. I don't have a take profit or stop loss. Oh, there we go. I put it. Good. Stock's taken off. You really want to wait for the confirmation. You don't want to just buy in, because, hey, if you can buy in at a lower point and then watch the stock pop on back upwards, that's just a little bit more profit, just a little bit more room for your stop loss. It all adds up and it all helps. So be patient, especially when things don't turn out the way you expected them. Just be patient with the stock market. There will be a reversal. There'll be an opportunity to buy in. I believe now is that opportunity. Come on, hit the button. There we go. So, order placed. So, another mistake I'm going to go over. I was prepared to buy into the market. I was ready. I had my finger on the button. Something I didn't keep in mind is you got to keep adjusting your take profit levels and your stop loss with the stock. As it moves, you have to change it, adjust it to fit the current price when you buy in, not the previous anticipated price of you buying in, unless you're setting a limit order. So I should have moved this down a lot more, and you'll see right now, as soon as I get into the market, because we're already at $5.11, $5.16, as soon as I got in, it took me out. Order placed, order executed, order placed, order placed, order canceled, order executed, sold at $5.07. If I would have moved my stop loss down and waited for a better buying in point, I could have avoided a $2 loss. And hey, a loss is a loss. It might not have been that much, but it all adds up, and there's no need for it. This was me trading without a strategy. There's days I have excellent trading and everything's on point and I follow all the rules of the course, and then there's days where, hey, I break a few because I'm lazy. But professional, advanced, successful traders are not lazy. Sometimes you just gotta call it a day, guys, and not take any more trades. And I was looking at my account, I was like, I think it might be that time to call it and just walk away with my losses. That was the end of my session. I hope you got some value, some insight out of that whole fiasco of my morning. Let that be a lesson to always place a stop loss and not place orders when a halt for a stock has occurred. This has been Tips and Tricks with the Millennial Bridge, and I will see you guys in the next video.